Hello and welcome back to Hacken's Do Your Own Research 101 crypto sessions, brought to you in conjunction with Third Academy. Today we are going to show you how you can check token supply. Importance of token supply research. In previous lessons we touched on the importance of understanding token supply. However, due to the many variables involved in its calculation, let's spend some time to dive deep into this concept. Considering that the token is the lifeblood of a crypto project, it's hard to overestimate how important it is to have the adequate and truthful values of what is available to purchase from a secondary market, what is locked, and how many tokens are burned. Investors should also have a clear understanding when a large amount of token supply is unlocked and ready to hit the market. Key questions. Let's summarize the parameters we need to know in order to find the circulating supply of a token. First, we need to know the maximum total supply if it can be identified. Is there a limit on how many coins can be minted? Is the token inflationary, deflationary, or disinflationary by nature? Second, how many tokens have been minted so far? Is it equal to the maximum total supply? How many of them have been burned? Answering these questions is another way we can calculate the total supply of a token. Thirdly, how many tokens are locked in vesting contracts that may come onto the market at some point in the future? How many tokens are lying dormant on addresses that belong to the team? And which addresses belong to the team anyway? By doing your research, you can be able to answer these questions and be able to calculate the circulating supply of a token. Limitations of the research. Typical issues that arise while calculating the circulating supply come from not being able to spot all addresses that are controlled by the team. Another limitation appears when a token has a floating number of tokens and is constantly changing. Currently, these limitations are dealt with by asking a crypto project to provide the API endpoint for these values. However, it is far from perfect as information uploaded to this endpoint can be forged. By utilizing tools described in previous lessons, you will be able to overcome some of the limitations. And in the further sections, you will be able to see the full cycle of gathering all relevant data. Max total supply. In the best case scenario, the maximum total supply is capped and the mint functionality is disabled. An example of such a case can be the Barn Bridge governance token. But what if this parameter always changes? What if the token has a rebase function and it changes its amount depending on various factors? In such a case, the best we can do is to give the amount of tokens we get from following the contract/read contract/total supply method. Inflation. What is it and how to check it? Inflation in token supply means how many new tokens have been minted over a year. Inflation can be introduced in many ways, through gradual token minting, through releasing locked tokens, or by rebasing the token. Inflation can also change depending on tokenomics design. For example, UNI, a Uniswap governance token, has a 4-year cap on the amount of tokens. However, after 4 years, the cap is removed and a steady rate of inflation is implemented. It is not easy to collect inflation data, and for the purposes of this tutorial, we just need to acknowledge if a token has inflation or not. However, if you want to calculate the rate of inflation, you can take circulating supply of a token from a year ago through Wayback Machine or CoinMarketCap's historical data and compare it to the current value. The formula is the following. The inflation percentage rate equals the 2023 supply divided by the 2022 supply minus 1. Deflation. What are the mechanisms of it? The opposite process of token supply being gradually cut is called deflation. Most common ways to do that is to burn tokens either through destroying part of the operational fees or manually moving tokens to an accessible contract. In some cases, inflation and deflation can work hand in hand, and the main example is Ethereum. It has no maximum supply, but an update called IEP/1559 has introduced a mechanism to burn a part of each fee's users pay. By having both forces in place, the protocol has dynamic supply and can increase or decrease the total amount of tokens depending on the market conditions and the block space demand. The last term that you have to consider is disinflation. It is the rarer case when a token has inflation, but it decreases over time. The most prominent example of such a mechanism is Bitcoin, which cuts inflation in half every 4 years. Many other forks of Bitcoin also use such an approach, hoping that the scarcity of an asset will increase faster than the cuts of inflation. Total supply and its limitations. As we discussed in lesson number 2, the standard definition of a total supply is the amount of printed tokens minus all burned tokens. The goal of this metric is to see how many tokens are there in existence. This should be a very straightforward metric, yet even at this stage, there are issues calculating it. The most common problem arises when a user tries to see total supply from Blockchain Explorer. Let's see an example by opening the list of token holders of Anchor, a decentralized RPC protocol. In the total supply method, we see that there are 10 billion ANKR tokens in existence. However, by checking the list of holders, we can notice that 2.4% of all of the tokens are located on null address, meaning they are burned. Therefore, we can calculate that the total supply of ANKR is at most 9.76 billion. Collecting data from token holders. But what if there are multiple burn addresses for one token? How to collect them all? The problem with burn addresses is that they are almost infinite in number, and developers can choose any of them to send their tokens to. However, you can search in Blockchain Explorer for null address to see the most used addresses, or go through the smart contract burn method if there is one in the smart contract you are exploring. With having a list of such addresses, now you can go through the token holders list and collect all tokens burned. Sometimes it is easier to do it by hand, and in other cases by downloading a CSV file of all of the holders and searching through it. But once again, be wary of the limits imposed by Blockchain Explorer on the amount of positions within this file. Using queries to collect data. If going through the file looks too cumbersome and you're looking for more elegant ways to collect data from blockchain, there is a way to extract whatever you want using GraphQL queries through services like graphql.bitquery.io. After a quick registration, you will be given an interface with the builder to construct custom queries. And though it is beneficial to know GraphQL to realize the full potential of such a tool for the purpose of this course, we will use only the simple queries. You may find an example of the slide of a script that would give you the sum of all of the LooksRare tokens that were transferred on an Ethereum network to 3 most commonly used burned addresses. You can modify this script by changing network Ethereum to the blockchain you would like to explore, currency to the address of a token you are investigating, and add or remove potential burn addresses in the receiver line. You can also use the Explore page in the upper part of the screen to see other queries that people are constructing and adapt them to your liking. Now we know that total supply should represent all the tokens minted minus all the tokens burned. We know that blockchain explorers often ignore the last part, and we have to take the matter of calculating the burned tokens in our own hands. And no matter the method you use, now you are prepared to make the best estimate possible. The last, but not least thing to remember is that tokens can be burned on many chains. This means that if there are multiple networks that a project uses, you might need to go through all of them. Here is an example of why it is important. Remember we looked at ANKR token holders on Ethereum and saw that about 240 million tokens were sent to the burn address there. However, ANKR is represented on multiple networks, including Binance Smart Chain. And by checking BSC scan, we can see that another 200 million of the tokens were burnt there, totaling the number of ANKR moved out total supply to 440 million. Issues with circulating supply. While understanding the max total supply and total supply is not that hard, circulating supply is the most confusing term among three. The problem arises from the fact that all current methods of calculating circulating supply are rough estimates due to the pseudonymous nature of blockchain. For example, CoinGecko defines circulating supply as total supply, team tokens, foundation tokens, locked tokens. And though this is a viable way to approximate the supply in circulation, it is not always possible to identify all wallets that belong to the team or identify all of the tokens locked. Moreover, in situations where tokens are distributed through staking or mining, circulating supply will be roughly equal to the total supply. To add insult to injury, tokens that belong to the team and foundation may not be locked, and therefore can and do enter the circulating supply at any point. So another method of calculating this metric is to focus only on true locked tokens, those within smart contracts with cliff or vesting schedule or liquidity pools with no owners. To learn more about the process, let's look at the covalent token CQT. In their circulating supply chart, we can see three addresses extracted from the total supply. After checking all three contracts, we can conclude that two of them are multi-sig contracts with two of two signatures required to execute transactions. Both signatures are the same on both contracts. Details can be found in graphic interfaces of multi-sigs. The third contract in the list is not verified and we can't read the content of its code. However, we can look at the deployer of this contract and see that the deployer is the same address that acts as an owner of the previous two multi-sigs. Rechecking circulating supply. So far, so good. But are there any additions that could improve the number? Are these the only contracts where control of the tokens belong to the team? First, we should check if there are any burned tokens. We can go through the list of token holders and find any noticeable amount of tokens on the null addresses. We could also recheck it by querying the graphql.bitquery.io as described earlier, and the result will show that there are no significant amounts of tokens that have been burned. Another thing we need to check is whether CoinGecko has all the addresses controlled by the Covalent team. To do that, we once again should check the contracts that are among the highest holders of CQT. None of them appear to be owned by the contract deployer, and even a multi-sig called Covalent Delegator has different ownership by two of three signatures. It is always useful to do a recheck of circulating supply metric, as it is then used to create a market cap of a token, simply by multiplying the supply by the token's price. Thank you for watching this week's course on how to check token supply. Remember, your success in crypto begins with informed decisions, and that starts with doing your own research. We are Hacken, and we are here to help you and the industry verify and gain trust in Web3 transactions. We look forward to seeing you at our next live event from the Third Academy Metaverse this week, Thursday, November 9th at 4:30 p.m. UTC. Don't forget to like and subscribe for more valuable insights into the world of cryptocurrency. Stay curious, stay informed, and stay ahead in the crypto game.